Deep, your view on Tata Tech, the kind of frenzy that we had seen in terms of subscription, the kind of over exuberance that we saw at the time of listing, what would be your recommendation to investors?
Yeah, Tata Technologies came at a price earning ratio of around 30. Now with a 150, I don't know what's the price now, how much gain it's trading at. So I think it's trading at like your put, yeah, 77p. So most large cap technology companies trade near 25 to 30 times. Most specialized IT, some of the specialized ones trade at more near 30 times. It's clearly overvalued at this price, and I think people should not get taken up by the irrational exuberance we are seeing today.
There was a big pop in IREDA as well, Sandeep, yesterday. Of course, a completely different sector altogether with peers, the likes of a PFC, REC, and how sought after they are. Just wanted to understand, for those who've missed out on the IPO allocation and very tempted looking at the first day gains, wanting to buy into these companies, what's your message out to them?
My message is that similar companies which have been listed and around for many years trade at much lower valuations. So you look at opportunities outside this space because this is complete frenzy what is happening, and it's FOMO by people who didn't get allocations or who think that. And there's a set of investors in the market who play on such illiquid counters because the liquidity is limited, holding patterns are limited, and uh, I don't think retail investors should get swayed by these kind of short-term moves. Uh, I would think that if many of these, if we look at the valuation that these companies are trading, then the Nifty should actually be trading at 30,000.
Fair point. Point taken. Don't get swayed by these short-term moves. But Sandeep, your view on the defense stocks, and is there merit in buying some of these names for, let's say, 3 to 5 year view?
Yeah, so I think the first thing is that if you have them, there's no reason for you to sell them. So that's one thing which is very clear that if you have got into these stocks at reasonable valuation, then there's no reason for you to sell. So don't be in a hurry to sell, just looking at the stock price movement. The second part is when to buy them. So I think there are periods in between markets give jerky corrections, there are corrections. So use those times to buy because the news flow, both in terms of what's happening for acquisitions on the aircraft front, on general defense, as well as on the ships, frigates, etc. I think the magnitude of these orders is so huge that it gives visibility of growth for these companies for several years.
Yeah, fair point. In case you're holding on to the defense names, continue holding them. Sandeep, another big event today, you'll have the exit polls for the state elections trickling in. A market moving event, you think?
No.
Okay, short and simple answer at that. So since it is an emphatic no, let's talk about what is actually moving the market, and that's definitely the cement play. Sandeep, you think it's a long-drawn story, the entire construction infrastructure and their ancillaries, and you think any time is a good time to buy into these names?
Yeah, so I think as we look into 2024, some of the sectors which have done well in this year, I think will continue to do well, which include names like capital goods, infrastructure, auto companies. I think the momentum is still there. And some sectors which should pick up next would be financials, which generally remain subdued this year, at least on the large cap side, and also the cement sector, because in between there were fears that input cost pressures might come back as crude prices rallied, but now they have come back again. So, and demand scenario looks reasonable. The only thing is that supply increases next 2 years will be strong. So I think the demand needs to hold up at current levels. But overall, I think it's a story which should do well.
Point taken as far as the cement sector is concerned, but in the last few minutes there has been a bit of perk up in the market. Let's pull up the intraday chart. We are above the mark of 20,100, so probably preempting that 3 p.m. move as far as monthly expiry is concerned. So in the last 30 minutes from the the lows, we have seen quite a bit of recovery as far as the market is concerned. It's M&M, which is higher by 2.5%. So that's one of your top contributors at the index level. Bharti Airtel is inching higher, and then cement names, as we pointed out, Ultratech Cement for that matter, is up a good 3%. But talking about the auto sector, Sandeep, tomorrow we'll get the auto sales data and we'll run the expectations as well. Seems like it's going to be a bounce back from the two-wheeler space.
Yeah, so I think data this month is important because the stocks have run up so much. So now the data needs to support the stock price movements, and the communication from both the dealers, FADA, as well as the companies indicates a strong pickup in demand, at least on the two-wheeler side. And also on four-wheelers, tractors were a bit subdued initially, but then later on picked up. So I think this time numbers are very important for short-term price movements of these stocks.
You have to take stock of Bharti. It's a 4-digit stock now. It's breached that 1,000 mark for the first time. The market cap is almost nearing that 6 lakh crore mark.
Yeah, I think there are 2-3 underappreciated large caps in the market. So Bharti Airtel, let's say something like Bajaj Auto or M&M. These are companies which are doing very well, but then they are relatively underappreciated because their moves don't tend to be very volatile. They are steady performers, steadily they give returns. For a long time they don't perform, and then suddenly they start performing. And I think for long-term investors, these are still good stocks.
On that note, we'll thank Sandeep as well for making time and speaking with us.